The path to $2,000 per month in passive dividends. Martin's financial freedom journey. Welcome to Wealth Echelon, your go-to destination for expert insights on finance, stocks, and ETFs. Our mission is to empower you with the knowledge and strategies needed to navigate the financial markets with confidence. Whether you're a beginner looking to build a strong investment portfolio or an experienced investor seeking market trends and analysis, we've got you covered. Join us as we break down complex financial concepts, explore market opportunities, and help you climb the ladder to financial success. Subscribe now and take control of your wealth journey. Martin had always been intrigued by the idea of financial freedom. Like many others, he spent years working a stable 9-to-5 job, diligently saving a portion of his income. However, he soon realized that simply saving wasn't enough. Inflation eroded the value of his money, and he felt the frustration of watching his hard-earned savings grow at a painfully slow pace in traditional savings accounts. This realization led him to explore the world of investing, particularly dividend investing, as a means of achieving financial independence. Martin's journey began with extensive research. He read books on investing, followed financial analysts, and consumed countless articles on dividend stocks. He quickly understood that investing in dividend-paying assets could provide him with a reliable and growing stream of passive income. His goal was clear: to generate $2,000 per month in dividends, allowing him to reduce his reliance on his job and eventually retire comfortably. Laying the foundation, understanding dividends. Martin learned that dividends are payments made by companies to their shareholders, usually from profits. These payments are typically made on a quarterly basis, though some companies offer monthly dividends. The idea of receiving money just for holding shares in a company fascinated him. However, he also knew that not all dividend stocks were created equal. Some companies had a strong history of paying and increasing dividends, while others were unreliable. To ensure that he was making wise investment choices, Martin focused on companies with a track record of consistent and growing dividend payments. He looked for firms with strong financials, healthy cash flows, and reasonable payout ratios. Companies that had weathered economic downturns and still maintained their dividends were especially attractive. The Dividend Aristocrats list, which features companies that have increased their dividends for at least 25 consecutive years, became one of his go-to resources. Setting a goal, the $2,000 monthly target. Martin broke down his goal into tangible steps. He needed to build a portfolio that generated $24,000 annually in dividends, which equated to $2,000 per month. He calculated that if he could achieve an average dividend yield of 4%, he would need an investment portfolio worth $600,000 to meet his goal. Understanding that he didn't have $600,000 up front, he created a structured plan. He committed to investing a portion of his income each month, reinvesting all dividends, and utilizing the power of compounding to accelerate his progress. He also decided to diversify his portfolio to minimize risks while maximizing returns. Building a diversified portfolio. Martin knew that diversification was key to protecting his investments. He didn't want to rely solely on a handful of companies, as that could expose him to unnecessary risk. Instead, he spread his investments across different sectors to ensure stability and consistent returns. He allocated a portion of his portfolio to blue-chip dividend stocks, investing in well-established companies like Johnson & Johnson, Coca-Cola, and Procter & Gamble, which had long histories of paying dividends and provided a solid foundation for his portfolio. Additionally, he recognized the benefits of real estate investment trusts, REITs, investing in companies like Realty Income and the Vanguard Real Estate ETF to gain exposure to real estate without the complexities of property ownership while enjoying higher dividend yields. To further diversify, Martin allocated funds to dividend exchange-traded funds, ETFs, such as the Schwab U.S. Dividend Equity ETF, SCHD, and the Vanguard Dividend Appreciation ETF, VIG, which offered a broad mix of dividend-paying companies, reducing individual stock risk. Understanding the value of high yields, he carefully selected high-yield dividend stocks in the utilities and telecommunications sectors, investing in companies like Verizon and Duke Energy, which, while riskier, provided a boost to his passive income stream. Lastly, to hedge against fluctuations in the U.S. market, Martin included international dividend stocks, investing in global companies such as Unilever and Nestlé, ensuring his portfolio had worldwide exposure and an extra layer of security against regional economic downturns. The power of dividend reinvestment. Martin understood that one of the fastest ways to grow his dividend income was through dividend reinvestment. Instead of cashing out his dividends, he reinvested them into buying more shares, which in turn increased his future dividend payments. He enrolled in a dividend reinvestment plan, DRIP, for most of his holdings, allowing his portfolio to compound over time. Each quarter, as dividends were paid out, he used them to purchase additional shares. This snowball effect meant that every year, his dividend income grew without him having to invest additional capital. Over time, this reinvestment strategy significantly accelerated his progress toward reaching his $2,000 per month goal. Investing wasn't always smooth sailing. There were times when the market dropped significantly, causing the value of his portfolio to decline. However, Martin remained disciplined. He reminded himself that market downturns were part of the journey and often presented opportunities to buy quality dividend stocks at a discount. Instead of panicking, he continued investing consistently. He followed the principle of dollar-cost averaging, meaning he bought shares regularly regardless of market conditions. This approach helped him acquire more shares when prices were low, boosting his long-term returns. Reaching the milestone, $2,000 per month in dividends. After several years of disciplined investing, reinvesting dividends, and optimizing his portfolio, Martin finally achieved his goal. His portfolio had grown to over $600,000, and with an average yield of 4%, he was now generating $24,000 annually in dividends, or $2,000 per month. This milestone was a game changer for him. The passive income provided financial security, covering a significant portion of his living expenses. It also gave him the freedom to make career decisions based on passion rather than financial necessity. While he continued working, he did so on his own terms, knowing that his investments provided a reliable safety net. Now that he had reached his initial goal, Martin set his sights on even greater financial independence. He continued reinvesting a portion of his dividends to ensure his income kept pace with inflation. He also explored new investment opportunities such as dividend growth stocks, which had lower yields but higher annual dividend increases. Additionally, he started mentoring others on dividend investing, sharing his journey and strategies through online platforms. He believed that financial education was crucial and wanted to help others achieve the same level of freedom he had worked so hard to attain. Martin's journey to $2,000 per month in passive dividends was not an overnight success. It required patience, discipline, and a long-term mindset. By focusing on high-quality dividend stocks, reinvesting dividends, and maintaining a diversified portfolio, he was able to build a sustainable stream of income that provided him with financial security. For anyone looking to follow a similar path, the key takeaway is to start as early as possible, invest consistently, and stay committed even during market downturns. Whether the goal is $500, $1,000, or $2,000 per month, the principles of dividend investing remain the same. With the right strategy and dedication, financial independence is within reach. That's it for today's video. If you found this helpful, don't forget to like, subscribe, and turn on notifications so you never miss an update. At Wealth Echelon, we're all about helping you navigate the world of crypto, investing, and financial growth. Have any thoughts or questions? Drop them in the comments below. I'd love to hear from you. Stay sharp, stay invested, and I'll see you in the next one.